Hello everyone, I hope you are doing fine. And in this video, we will be discussing about the fund flow statement. So what basically the fund flow is, the fund flow statement are also known as the statement of changes in financial position of a company. Okay. Sources and uses of funds provide the detailed insights into the financial health and performance of a company by tracking the changes in its financial position over a specific period. Unlike the cash flow statements that focuses on the cash transaction, the fund flow statements examine the movements of the fund within the broader context of the working capital and long-term sources and usage of funds. Here is an in-depth look at the fund flow statement. So for the fund flow statement, the key components that are used are the sources of funds and the uses of funds, which we will study in detail. So firstly, key components of fund flow statement. These are the sources of funds, which includes the inflow of funds, indicating where the funds have been generated. And the common sources include issue of shares or debentures, long-term loans, sale of fixed assets, non-operating income, decrease in the working capital, requirements or components, which means decrease in inventory and decrease in receivables. Now, after that comes the uses of. This represents the outflows or applications of funds, indicating where the funds have been utilized. So it basically is the statement of the outflows or the application of funds where the funds have been utilized. Okay. The common uses include redemption of debentures or repayment of loans. Also, the purchase of the fixed assets, payment of the dividends, non operating expenses and increase in the working capital components, which includes the increase in inventory and increase in the receivables. So it is just the vice versa of sources, where we talk about the inflow of the funds. However, in the uses of funds, we talk about the outflow of the funds. It includes the issue, it includes the redemption, it is for the long term loans, it is for the purchase of the fixed asset, it is for the sale of the fixed asset. And then the non operating incomes, and here comes the non operating expenses. Here we talk about the decrease in the working capital. In the uses, we talk about the increase in the working capital, which is the inventory and receivables, inventory and receivables. So this is it. After that, we will talk about the steps to prepare the fund flow statement. Steps to prepare the fund flow statement. So the very first step is the preparation of the changes in the working capital. Okay. Preparation of statement of changes in working capital. This statement shows the changes in the current assets and current liabilities between two balance sheet dates. It also helps in determining the changes in the working capital. Okay. Then secondly, we talk about the determination of funds from operations. This involves adjusting the net income for the non-fund items like depreciation, amortization, and other non-cash expense. The formula for fund from operations is funds from operation is equals to net income plus non-cash expense plus losses minus gains. Okay. Then after that, the third step is preparation of the fund flow statement. Preparation of the fund flow statement. So first of all is the preparation of the statement of the changes in working capital. After that, we determine the funds from the operations, and after that, we prepare the fund flow statement. Okay. This statement summarizes the sources and uses of funds over the period. It categorizes the various sources and uses, showing the net change in the working capital. Okay, so this is how we prepare the fund flow statement. Now, let us just take an example and prepare the statement of changes in the working capital. It's not gonna be like that. So, statement of changes in the working capital. So, let us just talk about statement of changes in working capital. We'll make it like this. So, particulars, previous year, current year, and increase or decrease. So, for the particulars, the very first head is the current assets. That is the inventory. Then is the accounts receivable. This is the accounts receivable. After that, cash, so that it will make my total current assets. It will make my total current assets. Let us just do one thing. Consider it as PY and consider the current year as CY. And this is the increase decrease की जगह. Let us mark it as change. Okay. So it will become my total current assets. In the previous year, it is rupees 1 lakh. In the current year, it is rupees 1,50,000. That means the net change is 50,000, and it is increased. It is 50,000 increase. Same goes for the inventory. The inventory is, sorry, this was the inventory of the, my bad. Same goes for the accounts receivable. The accounts receivable is rupees 2 lakhs. Statement of change for the current year is 1,80,000. That means for the current there is 20,000 increase. Okay. For the cash is 50,000 for the previous year and cash is 70,000 for the current year. Hence, there is an increase of 50,000. That means the total value of the current assets is 3,50,000 for the previous year and 4 lakhs for the current year, and the net change is an increase of 50,000. Now, in the case of the liabilities, we talk about the case of the liabilities. Current liabilities. That is the accounts payable, short term loans, total current liabilities, and in the end, we will sum it up with the working capital. Okay, so let's talk about the current liabilities. Here, the accounts payable is 80,000 for the previous. For the current year, it is 90,000. That means there is a change of rupees 10,000 and it is increased. Okay. However, for the short-term loans, the changes were, oh, sorry, for the previous year it was 70,000. For the current year, it is 60,000. That means in the current year, there has been a decrease of 10,000. For total current liabilities, 80 plus 70 is rupees 1,50,000. For the current year, it is 2,50,000 now. Sorry, for the current year as well, it is rupees 1,50,000. That means there is no change. Hence, the total working capital will be current assets minus current liabilities. My current assets is rupees 3,50,000 and my current liabilities is 1,50,000. That makes it my working capital rupees 2 lakhs. Similarly, 4 lakh minus 1,50,000, that makes my current working capital as rupees 2,50,000. And in order to identify the net increase or decrease, we can see that the total net increase is 50,000 in here. So, if we have to calculate the fund from the operations, we can use it like this. That means fund from the operation. Net income is rupees 1 lakh. Add appreciation to that of rupees 30,000. Add loss on sale of equipment. That will be 5,000. Then less the gain on sale of investments. Of rupees 10,000. Which will calculate your fund from operations. That is 1 lakh 25. Okay. This was just an example. So the net income was rupees 1 lakh. In that, we added back some depreciation, we added the loss, we subtracted the incomes we had, and we finally find out our fund from operations. Now, let us just use a practical example and identify further. When we talk about it, from the same example, we will prepare a fund flow statement. Fund flow statement. So hence here we'll talk about sources of funds and amount. So funds from operations, sale of fixed assets, issue of the shares, decrease in accounts receivable, and finally the total sources of funds. Okay. Here, the fund from operations is 1,25,000. Sale of the fixed assets is 50,000. Issue of the shares is 2 lakhs. Decrease in the accounts receivable is 20,000. And the total sources of funds is 3 lakhs 95. That is the total of 2 lakhs plus 1 lakh 25,000 plus 50,000 and 20,000. That's it. This is the sources of the funds. Now we talk about the uses of the funds. and amount. So first is the purchase of fixed assets. Then is the redemption of debentures. Then is the payment of dividends. Then is the increase in inventory, increase in cash, and total uses of the funds. Here, it is rupees 1 lakh. For the redemption of debentures, the amount is rupees 50,000. For the payment of the dividends, the amount is rupees 75,000. And these are all the hypothetical amounts we are using. We are just learning how the fund flow statements are made. This is not a question. You are not asked to solve a question. This is just how you put in the values and what is the format, basic format of the fund flow statement. So increase in the inventories is 50,000. Increase in the cash is rupees 20,000. So the total uses of the funds will be 1,50,000, 2 lakhs, 2,75,000 and 2,95,000 in total. Okay. After that, net changes in the working capital. Net changes in the working capital, which will be the sources minus the uses. That means the net changes in the working capital equals 3,95,000 minus 2,95,000. Why? Because the total sources of fund was rupees 3,95,000 and the total uses of fund was rupees 2,95,000. That is equivalent to rupees 1 lakhs. Okay. So this is how it will be calculated. The fund flow statement, first of all, you will talk about the sources of the funds, amount, then the uses of the funds, and after that, the difference between the sources and the uses. Okay. Now, next up, let us just talk about some of the benefits of the fund flow statement. So basically, the benefits of the fund flow statement include first of all, it is the comprehensive financial analysis, a complete financial analysis. Means the fund flow statement provides a broader view of financial movements, capturing changes in the working capital and long-term financing activity. Okay. The next up, it is used for the assessment of the financial management. Assessment of the financial management. How they help assess how effectively a company is managing its funds, including the ability to generate funds and utilize them efficiently. Next up, it is useful for the investment and financing decisions. How investors and creditors can be used can use the fund flow statements to evaluate the company's financial strategies. Also, the investment in the assets and management of liabilities. Other than that, it also helps in identifying financial trends. Stakeholders can identify the trends such as consistent fund generation or recurring financial stress. Then is the planning and budgeting. It is also helpful for the planning and budgeting. It can be used for better financial planning and budgeting, ensuring that they have sufficient funds for the operations and growth. Then it also has some limitations as well. It also have the limitations as well, which are as follows. The limitations of fund flow statements. The very first limitation is the complexity. Preparing the fund flow statement can be a complex and time consuming, requiring the detailed knowledge of the company's financial transaction and accounting principles. So it is a complex and time consuming process. Since it needs detailed knowledge of company's financial transaction. Next up, historical nature. Like the cash flow statements, fund flow statements are based on the historical data and do not provide the real-time insights into current financial condition. Then it also have the potential for misinterpretation. That since if you do not have the understanding or the stakeholders do not have the understanding of the accounting terminologies or concepts, then the stakeholders might misrepresent the information. Since detailed knowledge of accounting principles is required to make the fund flow statements, the stakeholders might misrepresent, yeah, might misinterpret the results. Then is the exclusion of non-fund items. Do not capture the non-fund transactions such as depreciation, write-offs are not captured, which can impact the company's financial health. Okay, so if we reach on the conclusion, we can say that the fund flow statements are the essential tool for the comprehensive financial analysis, which is offering the insights into the movement of the funds within the company. They complement about the financial statement by providing a broader perspective on how the funds are sourced and utilized despite their complexity and limitations. The fund flow statements are invaluable for the financial planning, investment analysis, and strategic decision making since it is based on the historical data. That's right. So this was all about the crux of the fund flow statement. I hope you have understood the topic and understood it well. Thank you so much.